For years, big investment firms have pushed the idea that fees are the enemy, the silent killer of your portfolio, and the reason that you won't have a comfortable retirement. But what if the narrative is misleading? What if the real value lies not in chasing the lowest cost, but in partnering with a truly competent advisor, one who can add far more than you ever imagined? In this episode, we're going to uncover the truth behind the fee myth and reveal what really drives long-term success. You do not want to miss this. Practice owners, tired of working hard but not seeing the financial results you deserve? I'm Eric Miller, and my best-selling book, How to Become a Financial Beast, is your game changer. Learn how to maximize profits, pay yourself right, and build wealth outside your practice. Download now for free. Okay, welcome back to the Financial Beast Podcast. I'm, of course, your host, Eric Miller, co-owner, chief advisor extraordinaire at Econologics Financial Advisors, here with, I forgot your name again.
Eric Gersh, number one advisor in the country.
There we go. So
self-named.
We help healthcare practice owners. We show you how to better acquire, control, and expand your money so that you can, quite frankly, live the life that you want to live. We do that through our planning process and the premier financial advice that we give. Check us out at econologicsfinancialadvisors.com. As a reminder, if you're brand new to the channel, share, subscribe, leave a comment. Tell your friends, make sure that other people, get the unbelievable knowledge that we are dropping on people every single.
Yeah. And you forgot to mention, we do give premier financial advice, but we give it to both owners and
we do owners and associates.
Yep.
You are correct in that. And today, this is a fun topic.
Yeah.
Because it's something that I think for the last 30 years, we've had to listen to. And
we probably will for the next 30.
And have people that are, quote unquote, of scientific in nature thinking always say to us, why would I pay an advisor when I can just invest in index funds?
Yep.
Okay. And they would then also back that up by some of these, studies out there that show that index funds over the last 30 years, many of these studies that I think were initially done by Vanguard.
Probably. Yeah, I don't know that for a fact, but I'm going to assume so.
Who is probably the
king of index.
The king of indexing.
Yep.
And now it's, of course, almost every big, large investment company does indexing of some kind.
Oh, yeah.
But for the most part, it was done by them to say that low cost, it's fees, investment fees that are killing your investment performance. They don't say that, they didn't say it mildly. They said it was killing your investment performance.
Yep.
And they would show all of these, calculators that said, if you're just paying that less, this is how much accumulative it would be over the course of 10, 15, 20, or 30 years. Okay?
Yeah. And when you use those calculators, it does look like a lot of money, but it's a half-assed, simplified, straight line,
It's like
life isn't
else.
An Excel spreadsheet.
Yeah, exactly. It's probably linear, and it doesn't take into account any other variable other than just the amount of fees, assuming that you were making, assuming that the markets did exactly what they did, assuming that tax rates didn't change, assuming that you didn't make decisions or you didn't have things in your life that came up or you made no distributions or whatever it would be, Yeah. I mean, it's crazy to think.
It's just a linear example. Like you said.
So anyway, we're going to talk about that. And I'm kind of excited to talk about that because, when we look at like people that are really successful, and I don't know how many people, I know we have hundreds and hundreds of clients. How many of them I would say that are above a $10 million net worth range, which I think most people would consider pretty friggin' affluent at that point?
I don't know the number. I could probably guess a percentage, but I don't know the exact number.
I don't either. It'd be probably something I'd need to look at. But let's say that you think we have 50 people that are above $10 million net worth. I would say so.
That's probably pretty fair.
Yeah, I'd say that. I'd say so.
Yeah.
And I know I have at least five or 10 clients, and I've asked, hey, were you at all concerned about investment fees preventing you from achieving where you're at right now in life? Okay, and not one of them attributed their success to the
absence of investment fees.
Exactly.
Yep.
Okay.
Yeah. And I mean, I think you need to differentiate too. Like doctors, whether you're an owner or an associate, you have some control over your income, right? You can make 100,000 a year, you can make 800,000.
Mm-hmm.
Okay. If I work as a straight W-2 employee for Coca-Cola, say, in their accounts payable department, and I'm just paid salary, in a case like that, I could see the argument of investment fees being very important or more important. I don't know if very is the right word, but they're definitely more important to that person than the doctor who's in control of their income. And it's not just because of the difference in affluence. It's, the difference in all the area. When you control your income, right, there's going to be more tax concerns.
Yep.
There's going to be more estate concerns. There's going to be more money going into investments just in general. There's just more.
Which leads to a really important distinction. If the more that you make, what ends up happening, where do people actually lose money as it's not the investment fees that they're putting away. It's the consumption lifestyle that they adopt. Okay.
Yep.
And they don't account for a rise of, hey, I'm making more money. Maybe I should increase the amount that I'm putting away. And, that's only going to happen if you actually have a plan.
Yeah. And I was just going to say, arguably, the biggest part of our job, it's not stock picking. We don't do that. It's behavior management on stuff like lifestyle.
Mm-hmm.
Like you just said, buying that lake house, leasing that new car, whatever it is.
It is behavior management, and it is the setting up of financial systems that leads to the success, by and large. Okay.
Yeah. If you can do those two things, you're going to be successful.
Yeah. And when I say financial systems, it means like, what are your financial systems? Meaning, what is the structure you have in place of how much money is going into retirement investments? How much is going into, reinvesting back into your business? How much is going into you living a good lifestyle? What is that? Do you have a plan for that or no?
Yep.
Do you just kind of do it willy-nilly?
Yep.
Okay. And you can only do that if you're going to work backwards and say, this is what I'd like to have in the next 7 to 10 years. And then we have to kind of, we have to make the adjustments to do that. But I can tell you right now that the investment fees that people have been paying on their, their IRAs or people get up in arms on a $20,000 IRA. Okay.
I know. I'm laughing because I agree.
Right. Like, oh my God, I'm paying, 50 basis points more on a 20,000. Like, do the math on that. What's 50 basis points on 20 grand?
Let's see. $100.
$100. Okay. And when confronted with the fact that you are vastly underpaying yourself, you have an inadequate compensation model, okay, where you are leaving hundreds of thousands of dollars at risk because you don't have a plan of how to allocate it. Don't you think that's a little bit more important?
And you're focused on that $100.
But man, that $100
It's gonna make a difference.
It's going to make a difference.
Yep.
So you guys have to understand the level of importance of having a good financial system in place. A plan with a good system that is being adhered to is just far and above more important than the fees that you're paying on your investment accounts. I'm sorry. It just is. Okay. And not to mention the fact that the other things that having an advisor do, which would be, debt management, which would be asset protection, tax planning, some of these other functions that an advisor does.
Yeah. I mean, if I save a client $2,000 on taxes, it's no different than their account, going up $2,000. It's a gain on their net worth of $2,000, no matter how you spin it.
Yeah. What is the game here? Are we trying to increase our net worth overall?
Yeah.
Yeah. I think that's what we're trying to do, right?
And we're doing it holistically. We're doing it, like you said, through reducing taxes, through paying off debt aggressively, investments growing, all these things. Is your business growing?
Yeah.
I mean, all of these things ultimately affect the net worth, and the net worth is my main focus. It's not whether the IRA earns 6% or 7.5% this year. It's what's the net worth going up.
Well, I think the wealth gap is one of the real targets, right? Like we establish, like, you have a deficiency of wealth.
Yeah.
Okay. And you need to improve that every single year. Like, you need $5 million. You have $3 million. You have a wealth gap. That's a problem.
Yep.
Okay.
Got to close it.
And you have to close that wealth gap. Okay. If you don't, so what is the game now? Okay. Well, if you don't have a good system in place of how you're going to increase your personal savings, how you're going to increase your overall practice value, how you're going to invest prudently, then that wealth gap is going to continue to widen.
Yes.
And you absolutely have to have a plan on that. Okay.
Yes.
So when we start talking about investment fees, like, okay, so you're paying an advisor, I don't know, what, $5,000-$10,000 a year in fees. I mean, in some cases.
Yeah.
All right. What are you getting for that? How do you measure that? Well, I think you measure that by looking at, is my wealth gap going down? Because that's behavior and that's systems.
Yes.
Right there of why that would occur. Okay. Is my net worth going up? Okay. Which is by and large going to be behavior and systems.
Yep.
And that's what a financial advisor should be helping you with. And if he's just looking at your portfolio every single quarter,
that's not a financial advisor. That's a money manager.
Yeah, that's just a
distinction there.
Yeah, that is just an investment manager, I guess you could say.
Yep.
I mean, that is the difference between the two.
Exactly.
And
a lot of people think they have financial advisors, but they don't. They have investment manager.
Yeah. Yeah, for sure. They have investment managers. And that's the demarcation line right there. That's the make break that a lot of you guys that have people locally that are doing some of that job. And I'm not saying they're doing a terrible job, but you're kind of missing the point.
Yeah.
Of that. You saw a study, right?
Yeah. There's a study that actually Vanguard put out that advisors add an extra 3% of value each year. Compounded.
Okay. Yeah.
And that's because largely of behavior.
If you have $1 million net worth, 3% working with an advisor, and this has no distinction of the quality of the advisor.
This includes garbage advisors all the way up to those who are the best in the industry.
Yeah, which is probably a wide variance.
Oh,
Yeah. 3% increase of your net worth. Okay. So
if you're worth $1 million, that's $30,000 a year.
If you're worth $2 million, that's 60. If you're worth $3 million, that's 90. That's a big difference.
Yeah.
So who cares?
Each and every year, and it compounds.
Yeah. So you have to stop looking at and being so fixated on the fee schedules.
Yep.
Okay. Most advisors are going to charge anywhere between on investment accounts that they're going to manage, probably 1%, 1.2% or less.
Yeah. I was going to say somewhere around. Generally, the average is around 1%, 1 to low ones.
Yeah,
but it
I would
varies.
say.
There's lower. There's definitely higher.
Yeah, and that's fine. I mean that is not going to kill or inhibit your ability to be financially independent. Okay, there may be some planning fees, there may be some other fees that they charge, but by and large, I mean you're not going to be paying $100,000 a year of fees to a financial advisor. You're not going to be paying $50,000 in fees.
Our clients, no.
No, most of our clients. I mean, I would say on average, what are people paying? Anywhere between $5,000 and $10,000 to $15,000 a year in planning fees and investment fees.
I mean, all fees, all in. Yeah, probably 10 to 12 would be average. If I had to guess.
But the system that we've created, which is allowing them and showing them how to keep 10% of their profits, which is showing them how to minimize their debt, which is doing tax planning, behavior training.
Yeah, I mean, it could easily be $100,000 to $200,000 a year of benefit for that 10 to 15 of cost.
Yeah,
I mean, that's pretty darn good trade-off.
That's an awesome trade-off. Okay, and could you do that yourself? I mean, I guess once the system gets in place, could you do it yourself? Yeah, but then life hits you, and there's always going to be demands on money. And you're going to have questions, and all it takes is one stupid mistake financially that can set you back.
Oh yeah.
Okay. Or by having someone that is there talking to you every month, holding you accountable, making sure that you're adhering to the system. Okay. It's just a smoother ride along the way.
And that's the biggest thing in the Vanguard study is accountability and behavior,
Yes.
Because, even to bring it back to the investment point, one of the biggest things that I've helped clients with, it's not knowing what stock is going to be the next NVIDIA. I wish I knew.
Who doesn't? Yeah.
But it's it's managing your behavior and not selling everything because the news is bad today. And we get those calls constantly.
No doubt. I mean, we certainly do.
People's natural intuition is to sell low and buy high.
But we'll also get calls about, hey, I want to buy this blank, or I want to borrow this, or I want to do this. And then of course we have to keep them out of bad decision-making processes as well.
Yes.
Which we don't necessarily see the payoff to them of not making a mistake.
No.
Okay.
How do you quantify? Yeah.
You can't. Okay. But just knowing the probability would be if you do that, that's going to set you back, $100,000. Now, I've had people that have put money in bad investments that we told them not to do. I can quantify that,
Oh, yeah.
Like I had a client put $50,000 into some, cannabis company. Okay. And of course it lost all its money. Okay. So, I guess my point is like let's get off the fixation of the fees that an advisor is charging you. But you know what? That's just it's an easy target.
It's an easy target, and it's
such an easy target. And I guess the industry does have some culpability in there because there are a lot of I guess I'm going to use a bad term, dog shit advisors out there that really aren't doing anything for their clients besides just collecting a fee, doing I don't even know if they're doing an annual portfolio review for their clients.
No.
I'd be shocked if they're doing that.
No.
And this is where you guys have to stop looking at the proximity of my advisor or the fact that he's a good dude, nice guy, great family. Awesome. Those things are important. What's more important though is their competency.
Yeah.
And their ability to make sure that you have a good system in place good wealth building strategies in place, and all these other things that we've talked about.
Yep.
You know, so it's hard. We can quantify that because we have stats, and we keep stats
Every year.
and we can show people how their net worth has grown. So people are like, well, that's not all you. You didn't do that. I'm like, okay. I mean, I didn't, but it's
I'm
certainly
the guide, right? I didn't come in your practice and produce and help you grow it, but I'm the guide.
Yeah. Yeah.
You
I
know?
mean, like what's the value of a good coach?
Yeah.
You know, I mean, it's like any other team, you know, I mean, players have to play. You gotta do your job. You know, like we can only give you like the reality of what the numbers need to be. We can only give you a reality of what you need to put away and the systems and the habits and all these things in play, which is our job.
Can't create money out of thin air.
But you guys got to like, you know, you got to implement it. You got to do the work. You got to be able to do these things. And the combination of those two things, if you do them right, you know, are going to be explosive. Now, does everyone need a financial advisor? I mean, some people we just that have the inability to take an order.
Yeah.
You know, I just are too much of a know best.
But it's just the compounding effect. The more affluent you are, the more important having a competent advisor is, because the bigger the dollar difference it's going to have on your net worth.
Yeah, that's pretty amazing. That's a great study. Where do you find that study at? Is just Vanguard?
I found it on Seeking Alpha.
Mm-hmm.
But if you just Google Vanguard study on the value of an advisor, it pops right up.
Yeah, that's pretty incredible. So guys, make sure if you don't have an advisor that you work with someone that, number one, knows your industry, number two, has a system that's going to, you know, help with all the different areas of your life and your household and your business, and includes that in the package as well.
Yes.
Because there's so much wealth that is available to be extracted from the practice that so many of you guys are leaving on the table, and then it just gets lost in the business because you don't have a good system of how to get it out. We show you exactly how to do that, show you the sequence, we show you the schedule, we show you where it goes, we show you what the outcomes are going to be, and ultimately that leads to a higher business value, and that leads to a higher sale value, and then, you know, that leads to more money at retirement to do whatever the hell that you want to do. So take advantage of that. Give us a call, schedule a call, go to econologicsfinancialadvisors.com, and that'll be the best decision that you make that day. And you can even work with Eric Gersh if you want to.
Please do.
All right. Anything else?
No, I think that's it.
All right, man. We'll see you guys in the next podcast.